All right, let's get right to your word of the day. It's reassured. Are you reassured by the rate cut? What's giving you this assurance?
Yeah, it's really about the Fed because of what I saw was that 11 of the 12 supported just a 25 bip cut, which I think is appropriate given inflation is still elevated, labor market is weakening, but the economy is still strong. And so I think for me, it's important that the Fed reassert that they are independent, and I think that independence will persist. So I think that's a very important signal.
All right, we've been talking a lot about the summary of economic projections and the fact there's that one outlier dot. I want to go to the consensus opinion here that there's two more cuts coming up later this year. Do you think the market needs that to continue to move higher?
I think they do and they don't, because I think this market has been driven as well by earnings. And if you look at what happened the first and second quarter, they were much better than expected. And next year, the projections are in the 12 to 14, even 15%. And certainly the forward commentary by companies has been very reassuring in that regard. And you're not seeing, if you saw even the retail sales 2 days ago, people are still spending. And I think a big part of that underlying this continued consumer spending is the 40 to 50 trillion dollars in household net worth that's been created since 2019. And that's an important fact to keep in mind no matter what's happening.
Okay, Barbara, very quickly, for our audience right now that's watching, right now we're looking at the president meeting with the UK Prime Minister Keir Starmer. He's meeting with the Prime Minister at his country estate right now in the United Kingdom. The two taking some pictures right now. We will break in if the president makes some comments. Barbara, I want to come back to you now and just talk about what this federal rate cut means for the broader market right now. I want to get to your pick, actually. It's UNH. So I think you may be answering a question I've been asking other guests. Where would you put money to work at right now? It seems like you're looking at healthcare.
Yeah, no, it's an important question because I think the mega cap tech continue to perform and will continue to outperform. It's a question of where do you get in? I think you have to stay long. You have to continue to look for new plays there. In the healthcare, that sector is so beaten down. Even names like Intuitive Surgical, which is a great growth name, with leading market share, that's down 30%. United Healthcare is very interesting. The stock has moved some 40% off of its lows earlier this year, but it's still down significantly year over year and year to date. But this was a premium company that was really steady state, had best-in-class operations and management. But the last 2 years post-COVID, big problem with utilization rates much higher, really underestimating how much costs would be up in their risk management. But what I've seen in great companies like this, they do find their way back. And so I think that the recovery, there's earnings are depressed. I think there's real potential on the upside, but not without risk. But I think they're really managing forward in a very positive way.
All right, so you're mentioning two companies in particular, United Health and Intuitive Surgical. I want to ask you about the broader sector. Are you seeing opportunities in the broader sector? Again, that's been one of the big laggards year to date. A lot of people are also talking about biotech with the rate cut and also less regulation in D.C. Is that another area in the healthcare sector, or the healthcare area, I should say, that you see opportunity?
Yeah, I think in the biotech sector in general, there's so much innovation, so many promising breakthroughs, particularly with AI really accelerating everything from drug discovery, drug development, and also bringing things to market much more quickly. So yes, I think there you need specialists because there is so much. There are hundreds of companies and a lot of early stage, mid stage, but I think there's tremendous opportunity going forward in that sector.
All right, speaking of tremendous opportunity, we had two guests on earlier that said they saw opportunities in bonds following this rate cut, and also just with the outlook that we're getting from the Fed. Agree or disagree with that idea that there's a lot of opportunity in the bond market?
Well, I think there is if you push out a little bit, but I think you are going to continue to see, I think this two more rate cuts this year are not unlikely, but not a given. But given unless the economy really weakens significantly or inflation, starts to come down again. So I think there is opportunity a little bit out there, but I think the much bigger opportunity is in the equity markets, and particularly the U.S. and also international.